Good morning, traders. Thanks for joining me. It is Monday, the 13th of October, 2025. It's 8 a.m. Chicago time. I hope you survived Friday. You obeyed your stops and you're safe and sound. You can continue to trade. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we are today, back in Chicago, back at my trade desk. The pre-market summary sheet from Convergent Trading, of course, can be obtained from those links shown in red in the middle gray box there. You can go and follow Conv Trading on X. And there are also some URLs there to explain some of the abbreviations and some of the terms that I use might be confusing and a turnoff for you. You could just go there and find explanations. Overall, strong risk-on sentiment today. You look at these. You look at the heat map here for percent change. You could see that allocation is to risk today, punching money back into the equities. And basically commodities still getting a lift. Look at where gold is, folks. $4,100. Every time I see this thing go another $100, I'm concerned for my fiat. So that's where that is. Remember Friday, we'll go over this technically. I forget the price, but right at 9:52 a.m. or so, 9:54 a.m. Chicago time. I'm in Chicago, so that's the reference. Hey, the exchange is in Chicago. So it is, in fact, the center of the universe. The market dropped because Trump had tweeted about China sending letters, and it's causing alarm. And then he came back and said they're going to punch back with some tariffs, and then later on it was announced that as of November 1st, all Chinese products would have 100% tariff. So we continued selling actually after the close. And then last night there was a message sent out saying, oh, G just had a bit of a brain fart. Things will be fine. Don't be scared. So we expected today to pop higher overnight. So on the Sunday open, we had a big gap up on a pretty big collision there, just a lot of lifting on the open, and we've been lifting since. So you can see that our relative range, which is the range so far in this moment of the session versus the average range in this moment over the last 20 sessions, our vol works the same way. You could see heavy range, heavy volume, which is completely expected given that we had about I think it's like a 5 or 6 sigma move in terms of close to close volatility on Friday. So expecting this volatility to continue, expecting strong market activity, expecting you to be glued to your seat today. Chinese imports and exports stronger than expected. Balance of trade lower than expected. The U.S. government continues to shut down, and now we're approaching the deadlines for payroll. Paychecks are due. We're due the 10th, I think, and I think there was somebody said it's actually the 13th and the 15th. Today is the Indigenous People holiday, also known as Columbus Day. And so the banks are closed today, but the markets are open. Like I said, President Trump came out yesterday, and this is always the case. We're going to give strong words, and then we're going to walk them back. He says, "Don't worry about China; it'll all be fine." Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The U.S. wants to help China, not hurt it. U.S. Secretary Besant said that the government shutdown is getting serious and starting to affect the economy. Remember, we're supposed to get CPI, PPI. There are numbers that we need to get in order for the Fed to decide what to do with the next change. The Fed is really pretty much on autopilot. We're probably going to see a 25 basis point cut, but without getting those numbers, we're adding a ton of uncertainty to various risk metrics. And so that being said, with the government shut down without a budget, there are still no negotiations going on between the different parties, and it's actually Republicans and Democrats together that are fighting some of the spending requirements that Trump has. So it has the promise of being quite messy and protracted. And so it's interesting. So the first hostages, hostages in Israel were released by Hamas today. So that's going well. And I think President Trump is over there talking to their parliament. So as far as releases today, Fed's Paulson comes out at 12:55, and other than that, we have UK retail sales monitor year on year at 7:01 a.m. Eastern, and the Reserve Bank of Australia meeting minutes at 8:30 p.m. my time. Looking at the S&P has 403,000 contracts traded so far. That is well above the first standard deviation of 230,000 by this time of day. The inventory is 100% long, and the range is 74.25 points. The first standard deviation for, or the edge of what we would call normal for the overnight range for the S&P is 50, as it shows in that box for ES overnight statistics. So a very important day, not necessarily to trade because the volatility is likely to be high. If you're trading a small account, it's best to just sit this one out or wait for things to calm down. Otherwise, we have a pretty good opportunity to see the auction unfold today at high speed. So let's get into what's going on here. Let me find. Okay, so this is Friday's action here. This is a full session chart that's in front of you. The news came out right up here, and it immediately dropped through, and we walked through many zones. These are balance and imbalance zones. Each one of these green lines, these are micro or mini balance and imbalance zones. We cut right through. We sort of held the 65.50 area on Friday on the continued drop. And you could see that we dropped even further after the cash closed. This morning, we gapped up. The settlement was 65.95, but the close was 65.52 on the week. And we have a pretty decent gap up on a 17 or 1800 contract print. And what we did is we walked past the Friday mid and VWAP and climbed through and kind of skated on it. But overall, we have somewhat of a balanced profile. Like we have a taper at the top, fat in the middle, and taper at the low. We have price at the overnight point of control right around VWAP and mid. So despite the big move, despite the big ranges, the big up day, 1.275% so far in the S&P, as it shows right up here, 1.27. And we have a very wide range, as you see there, 74.25 points. We are still quite imbalanced, and we are trading right on top of the middle of the range where the fattest part of the profile was on Friday. One thing to note here, auction-wise, this is a news-based event, so it has special characteristics. This is not something that was driven by the market. Two things. One, the SOC is way up here. Someone from Convergent, please look up the SOC. I posted and posted in the chat for everybody. What is the SOC for the ES from Friday? I posted it in the chat room. Please drop it in here. I forget the number. I think it's 6794 or 6792, something like that. So that's one. The SOC is going to be important. That's the scene of the crime. That's the scene of the crime, and that's where the existing auction was getting disrupted. Now, the existing auction was already showing signs of disruption. Okay, thank you, Sheep Zero, 67.92.50. The existing auction was already showing some cracks in it, but still remember, we were testing and unable to hold the 6,800, and then we broke down. So the SOC being at 67.92.50, right in here, is right on top of the point of control. And what do we notice? The point of control never shifted down. We did not trade in any area enough to show that there is significant acceptance of the of value, or a significant shift of value. In this case, value moving from 67.92 down to possibly 66.80, which is a big shift down in value. There was a huge shift down in prior settle, as I said, about 6 sigma move there. So what does that mean? There's a very likely snapback rubber band effect on any good news here. We already had a pretty decent gap in the overnight session versus the close, an okay gap versus settlement, about 37 points or so versus settlement, much bigger versus about 100 points or 90 points versus the close. But value didn't shift down. So there's this value gap that's going on here between the current price and where the last value is. So what happens? If we have a profile that looks something like this, and the profiles before it are up here, up here, up here, up here, whatever, what happens is, and we have the market kind of dropping and finishing away, this is a suspect. This becomes a suspicious move in that we moved away from value but didn't drag value down. And that's going to be pretty important, okay? But we'll see how this plays out. So just remember that 67.92 area becomes very important. We are overall, let's bring this in. Oh, let's get rid of those trades. Overall, where are we in the bigger picture? Look at how we are positioned versus where value is in this area. The point of control is right in here. It's right up against the overnight point of control. So this is where the highest volume so far has been over the last run of maybe the last month and a half. Since the beginning of September, the point of control is in the area we're at here. So to me, this is an additional input that says to be careful, maybe keep your hands off the mouse early in the morning, because it is like, of course, unless there's news, it is likely to test both sides here. We've accepted these prices down here before, and we are likely to hold here and consolidate before the next move, which is likely to be higher. Again, this is news, so we are considering the snapback after the news. As they say, buy the rumor, sell the fact. That's an age-old adage in trading. So what am I expecting today? Very, very tough to put a probability on anything today. And remember, we always look for to generate plans for all scenarios, right? So overall, we're in the middle of the range, right on top of the point of control and VWAP, right on top of the overnight point of control. This is very likely to chop around. I'm looking for a retest down to the last low down here. As long as it's holding this 60 area, 66-60 area, I'm looking for the overnight stat to snap up, to be snapped to the upside, and looking for 67.20, and that should give us our expected range for the day from 66.60 to 67.20, giving us 60 points for the day. That's the primary scenario. That's the path of least resistance given where we are. Now remember, we've breached, despite the big selling, we've breached the midpoint and have already exceeded it, and we're holding steady here in the fat area of the profile. Secondary scenario, open, later money, the later trade desks come in, they buy it up, we push higher, we get resistance at 6,700 or so, consolidate, come back to the middle, and then droop down later in the session and potentially breach that last low, but then hold steady. And what we have is a market that's sitting inside of that 74-point range, the 74-point range that we're already in. So we end up with an inside day. That's a very high possibility. There is a third scenario. The third scenario is the Chinese retaliate today with some more rhetoric. They go and raise whatever, or put further restrictions on rare earths or whatever it is, and then we end up basically testing the prior low. I'm ready for that as well. And if that's the case, so what's important? What's the takeaway from this kind of exercise of creating scenarios? Just as a reminder to those who are new, the purpose of this is to be ready, to visualize what might happen, and to be ready and to know. For example, I know that 6660 is likely to target 6720. I know that from my scenarios. I know that I'm looking for a breach of the overnight stat, which is about 98% historical probability. I'm looking for that to breach to the upside. I don't get a breach to the upside. We're unable to get to the overnight high. We hold 6,700 or below. Then I know that we're very, very likely to push to 6,650. 6,650 holds. I know that I need to keep my hands off the mouse. We're likely to move into balance, and it's likely to be choppy because the overnight range is really wide. So the overnight stat, historically speaking, if filtered for 74 points, that probability decreases a fair bit, but the sample size becomes so small, it's not really a high confidence stat. So these are the things that I'm considering as a trader. The third scenario is we make our merry way up. We have an impulse down. This is likely a news event, a retaliation from China, which breaches the overnight low. And then we have the prior settle stat. The target becomes, the key here is we see the impulse down. We're measuring the pullback. We're looking for a stock zone against which we can initiate a short with the predefined risk, and then the prior settle becomes the runner. So you're gonna hang in there. I'm gonna hang in there for the prior settlement to be targeted. So that will be the 6,600 area, and then a breach into the 65.95.50 for prior settle to be taken. So that's scenario 3, okay? Those are the 3 key ideas. That's the ES. The Nasdaq has pretty much the same properties. Let's take a quick look at relative delta for those who want to compare relative deltas against an MBO feed. There you have it. I know folks in Convergent are looking at this. So here we have, pretty strong lifting throughout the session. I mean, it's just been lifting and lifting, and you could see that the very large lots, this yellow line, are holding quite positive. 2,900 traded from the very large lots, and they're kind of dominating. This tells us that higher time frame traders are likely to be in control. And what does that tell us? We need to we need to be suspicious or back off of our daily levels. Things like IB retests, the opening swing high and low, DGPs, when the OTF or the other time frame or the higher time frame comes into play here, they don't really care about our little levels, our intraday levels. So I'm gonna Again, I'm going to say just be suspicious of levels you might trade that were generated in the day time frame because of the level of activity that we see from very large lots. Same with the Nasdaq right there. Pretty dominant control by very large lots in this situation. So just be careful there. Let's take a look at crude. Again, Nasdaq, I really don't have too much to say here. NQ, same thing. The market filled the targets before the price even got there on Friday. It just didn't even see it trade in those areas. But the Nasdaq, you could see, has gapped up. Nasdaq has more of a kind of a multi-distribution profile, really. But overall, same story. Here's the overnight point of control. These are the DGPs, and we're kind of holding steady. The Nasdaq looks more ripe for a push higher to fill in the single prints than the S&P is. The Nasdaq looks a lot more, even though the primary scenarios are the same or similar, the Nasdaq looks much more prepared to take on those higher prices. Here's what it looks like on the market profile charts. These blue shaded areas are single prints or weak structure. We've breached in there. I'm expecting it to continue to breach these single prints into the 25,150 or so today. Looking at crude, crude finally spills over. So again, let me turn off these trade indicators. Just don't want to create any confusion. Crude finally rolls over and gets down into our target. I've been talking about crude targeting the 58 handle, and it did just that. It pushed to 58.22 on Friday. Crude has been in a down kind of sag for quite some time. You could see here crude on the daily is really just, lower highs with every retest. It's pretty obvious to me. It was quite obvious to me that crude is very likely to test the high of this balance, which is exactly where we are right here. This is why I was targeting this range. And then if it holds below here and starts to continue, now we're looking at this area here being the key target for crude. But crude, very clear weakness on every retest higher, and this is why I've been kind of bearish crude. Even on days where it popped higher, crude just looked quite weak. No matter what it did, it looked quite weak on the buy side. Okay, please make sure you mind your risk. There is no trade that is worth risking more than 1 or 2% of your account. It doesn't matter what your margin requirements are or what your margin ability is. Your goal, first and foremost, as a trader is to survive. You have to survive every day, because without that, you don't show up tomorrow, you don't get to trade tomorrow. And so apply that same principle today. Make sure that you are taking calculated risk on every trade. Focus on high probability A+ type setups, the ones that really speak to you. Focus on those. This type of market with a lot of volatility, volume, and range, you're likely to get many more of those opportunities, so you don't have to go and chase lousy trades. Be picky in my opinion. Don't forget, for those of you in Convergent who are in the Accelerator program, live week, the live execution week is this week. We start tomorrow morning. We'll do a TraderBite, then we'll cut over to Zoom, log in there, share a screen, and go live. That starts tomorrow. We'll go through Friday, and then we'll be back the following Monday to finish off this cohort. Looking forward to you graduating the program. Good luck, and I will catch you on the other side. Don't forget to subscribe. Oh, by the way, there's a TraderBite every day this week because of the Accelerator program. Don't forget to subscribe and like, and I'll catch you tomorrow. Take care.